All right, what's up, guys? So this is our Q&A session, pretty much to go over phase one, right, of the mentorship. So this is Q&A session for phase one. Okay, so the first question is, okay, so I'm gonna do that closer to the end, go over some of the homework from Discord and kind of like I did last time. So I could do that closer towards the end. Jay, if I don't pass the quiz, what happens? So if you don't pass the quiz, before I pretty much, told people they don't pass the quiz, you go potentially get like once the mentorship is over with, as far as like keeping people in the chat. If you can't pass the quizzes, that means, at some point you didn't take the mentorship serious. So normally I would probably kick you, but I'm not gonna do all that right now. I'm gonna give you guys a chance. If you don't pass the quiz, then what's gonna happen is I'm gonna put, as far as your name, you're gonna have like not to put somebody out, it's just like to let people know, like hold people accountable. You're gonna have like a little badge to your name that like basically you can't like move forward until you pass that quiz. Because that'd be the problem. Like if you can't pass phase one, the mentorship does get harder. So if you can't get past the first quiz, then you need to keep working until you pass that quiz. I think that's fair. I don't want people lacking in this mentorship, right? So I want you guys to be sharp. Okay, Jay, I am having a hard time putting my question into words, but I am used to making support and resistance line based on 2 to 3 touch minimum, which I got a very good at and helped me to understand how to see candlesticks. We're going to break them. But now that I've switched to your way of doing it, is creating them based off of aggressive move, I'm having a difficult time identifying that same thing. In other words, I'm having a hard time correlating the two, since before I train my eyes to see and it seemed easier, okay, right, okay. So this is actually something that I go through a lot with a lot of people that I meet, where, they learn one thing, and then now that they're trying a new mentorship out or something like that, then, they're trying to learn a new thing, but their eyes has been trained to see the previous thing. So what I have to say about that is, never, if you took a mentorship with somebody else or you learned anything else, right? Don't just say that what they did is wrong, right? You can still do it that way. I'm just showing you the way I did it. So if you're having trouble, look, keep it simple, right? When it comes to my type of support and resistance, let me remove some of my stuff right here. When it comes to my type of support and resistance, guys, yes, it's 3 touches work in a way, but the only difference when it comes to 3 touches is the fact that I'm looking for those aggressive moves, because those are where price actually react off of, right? I'm looking pretty much for turning points, right? So in a way, yes, we still got those 3 touches. Yes, that's still a characteristic as far as support and resistance. But when I'm saying looking for key levels, that's what I'm looking for. I'm looking for those touches, because those are the ones that the price is actually going to react off of. And I know you guys don't know about this yet, but right here, this is what we call this line right here. This is attached to this volume right here. This is what it's called POC. You will learn about this soon, right? This is the point of control. So this is pretty much the highest point that the volume has been. And as you can see, that is also, without that, let's remove it. Without that, that would have already been one of our levels, right? Because we had aggressive off that level, right? We had aggressive bounces. We had aggressive turning points off that level. So then when we add the indicator back up, it's pretty much on the money, right? That means buyers and sellers, or this level is this level of significance, right? So that's the reason why I'm trying to get you guys to start focus more on turning points rather than just 3 touches, right? Now, when we get into scalping and when we get into stuff like that and like quicker day trades, the 3 touch rule is definitely going to be something that we use, right? That's not wrong, but just going here, take your time, relax, focus on turning points, right? Focus on where the price has been turning. Like, don't overcomplicate it. Focus on the price. Like right here, we hit this level, we bounce clean off of, right? We want to focus on that, because if we just did 3 touches, we're going to limit things. We're going to limit, how much money we could potentially make on a trade, if that makes sense, right? And I don't want you guys missing out on opportunity, right? It's already hard enough to find certain trades, and it makes it even harder to hold those trades, right? So that's what I'm teaching you guys to, have better levels that can make you more money, right? So I'm going in here, I'm just looking for turning points. Like, keep it simple, guys. Just look for turning points, right? Don't overcomplicate it. We're just looking for turning points, right? There we go. Now, like I said, that's why I had you guys add the line chart up, because it gives you a little better when you draw your support and resistance. Now look at it, right? Right? We already had this level from here from bouncing and stuff like that. Then look how easily when Nike had came up, it rejected that level immediately. That's the whole goal of me teaching you guys support and resistance, is when it gets to your levels are so spot on, price reacts immediately to it, so you can base your trades off of it and make money, right? So what I would say is go in there and practice. Just practice make perfect. You know, if you learn a certain way, then, you know, just keep practicing it and keep that way in mind, right? You're not wrong if you do the 3 touch points. I'm just trying to get you to get more money. That's all. If that made sense. Yep, supply demand homework. Okay. Can you please show us how to use VWAP? Do you use it? So yeah, that's actually so for scalping, when we go over scalping, VWAP is one of the indicators that I will use. I don't really use it for anything else. I normally see when it comes to trading, guys, I personally try to keep the least amount of noise, right? So too many indicators, too many things, it just kind of clouds your judgment, right? I used to have this problem all the time. Like when I used to live trade and everything, we used to get on live trading, and I got to a point where the market, especially when the market started changing, right? The market changed this year, right? So a lot of the things that we did last year started not to work this year. So people had to make adjustments. And that was one of the major adjustments that I had to make for this market, was the market was becoming so choppy, so, you know, so just all over the place. The volatility was just crazy, where these indicators, you know, indicators are lagging, right? Most indicators are lagging indicators, right? So when it came to you know, adjusting, we have to understand, if the market is so choppy, by the time an indicator noticed that, you know, price action is choppy, you done already lost on the trade, right? So that's one of the things that I stressed as far as teaching my mentees, where no, I'm going to teach them how to trade raw price action without anything, right? That was one of the things I said. I want them to be able to come on here without any indicators and be able to make their trades, right? And that's where I wanted to focus on with this mentorship, right? Was getting you guys into like understanding that indicators are cool, but you supposed to be able to make a trade based off of nothing, like just levels and your charts, right? So when we look at here, we have what? A trend line, right? Hold on, right there. So how did this Nike trade even come about? So what happened was we had this trend line, rejection points, aggressive rejections here, and then as you can see, we kind of just consolidated under. And then this is where you take your calls on that breakout, right? We took that calls on the breakout. And what did it do? What did it do, guys? Right here, this is a prime example of the mentorship right here. Exactly, we went over all of this, gave you a clean trade. Trend line break, what happened and where did it go? Immediately to that key level, right? That's how easy this trade was. Took the breakout, boom, key level hit, and then it sold off from that key level, took your profits. You know, it actually gapped up from here, but if you took the breakout, you caught Nike at 104 to 111, right? That's a five, almost $6 move on Nike, right? That's a huge move for a stock like Nike. That's what I'm trying to get you guys to understand. When you have those key levels, you know, you might have some smaller levels on the smaller time frame here, but overall, guys, you got a key level. It went straight to that key level, right? That's what I'm trying to get you guys to see. This is a picture perfect trade. And most likely, what do we say? It's most likely going to come back, retest this key level, which will be that trend line, right? And then if we're still bullish, what's going to happen is we're going to bounce off that trend line and come back up to that key level, right? Or we do have a smaller level here. If you make smaller levels, if you do your 3 touches, then it could bounce right off of this key level, right? Well, this ain't really a key level, but we can still plot it. It's still a level if you wanted to notice, right? We plot it right there. You know, we reject it here, we support here overall. And right now we're at that level. So we could bounce, you know, the following week, right? We don't know. We just have to sit there and wait. So that's, you know, how we want to make trades. But we'll get more into that next week on strategy based when we get more into like, you know, learning strategies and stuff like that. But this was, you know, you can't say it's no opportunity in the market, because there you go. If you've been watching the classes and you would have seen this, you knew every right to take this trade and ride it up, right? This is over. This was Nike, right? I know Nike. I trade Nike a lot. Of this move was most likely a 100 to 300% move, right? You probably a little more depending on when you got in. Okay. I keep getting in calls or puts at the exact wrong time. Have you had this issue? If so, how did you do to overcome this? Great question. So if you're getting into calls and puts, like let's say that you get into calls and then the market just go down, right? Or if you get into puts, then the market just go up. One of the major things about this is, first of all, you're probably trading in, you know, a choppy market. Most likely a choppy market is those markets that do stuff like that all the time, all the time. So that's number one. You have to identify what type of market that you're trading in, right? If today was pretty choppy, so if you did something like that today, then you probably got caught in the choppiness, right? Then another thing that you probably didn't notice was probably lower time frame analysis. And that's something that we're going to get into. I think that's one of the things that, you know, make me a little different from the other mentors is I'm going to teach you guys, you know, actual like real deep into certain things, right? You guys probably already know what a hammer candle is, right? We all know what a hammer candle is, but we might see a hammer candle on the 1 hour. Do that mean that we just take calls, right? No, that don't mean that we just take calls, because what is that 1 hour candle on like the 5-minute time frame, right? That's going to give us our entry. So most likely, just gonna give y'all a little game right here. Most likely, a hammer candle is a downtrend on a lower time frame. So instead of just taking the hammer candle by itself, you come to that lower time frame and you have that downtrend and you're waiting for that downtrend break. Then you take the trade, right? A lot of people don't understand that. A lot of people don't teach looking actually into candlesticks. Why is that candlestick there, right? It's all about smaller time frame analysis, right? And that's why people begin into these trades, because they don't understand what the smaller time frame is teaching them. You have to understand. Let's draw it right here. I'm about to show y'all what a hammer candle is on the smaller time frame. So here we go. Let's go right here. I'm about to draw it. So let's say that we know that a hammer candle. So we have a hammer candle, right? Hold on, y'all. I suck at art. Okay, do everybody see my hammer candle right now? Okay, hold on. Let me delete this. Okay, so and this we're gonna get into this next week, but I just want to show you guys something for a reason. So a hammer candle, most likely, this is let's say that we see this on the 1 hour or the 4 hour. So when we come to actually take entries on this, we know this is a bullish candlestick. We want to take a reversal. This is what it looks like on a smaller time frame. So we normally have what we call a downtrend, right? Because remember, price has started here and then it's coming down, right? So what happens is we normally have a move like this on a smaller time frame. We got this going on. Hold on, let me show you. So this is what a hammer candle looks like on a lower time frame. So this candlestick is all of these candles right here. And then how it works is as we come back up before this push, when this push happens, then that's normally a breakout on the smaller time frame, right? So sometimes when you see this, what happens is it can break down because it got rejected on this breakout. And that's why you will see candlesticks not working, because it'll get rejected on the breakout, and then this candlestick will be invalid. It will break down, right? So you have to understand this. You can't just say, oh, I see a hammer candle, guys. You have to know why that hammer candle was there, what's really going on inside that candle. And that's why a lot of people have bad entries, because they don't know what's really going on inside this hammer candle. They just see the candle and think that's how you're supposed to trade it. And if this is probably confusing to you, understand, I got you. I'm going to teach you the right way. like I said, this helped me a lot, understanding what's going on inside the candle on the lower time frame. Like, for example, today I was taking cat calls, right? No, was it cat calls? I think, yeah, it was cat calls, right? Cat had a hammer candle on the time frame, right? And I was wanting to take calls because it looked like it was bouncing. So I came to the lower time frame and I was looking waiting for us to break out. And we never broke out. We ended up rejecting and coming lower. So then this hammer candle, it just turned into, hold on, let me click that. It just turned into this, right? When I tried to take that trade, I couldn't take it because the lower time frame, the hammer candle ended up turning into just a bearish candle, right? This is what happened after that, right? It came down and then it broke below. And how did I know? How did I not get in early? How did I know not to get in? Was because the lower time frame was in this downtrend waiting for the break up. So this is exactly what happened. And that's why you need to understand how to read candlesticks, right? Not see a candlestick. You need to understand why is it there? What is happening? And we're going to get into this. This is definitely, make sure y'all at the candlestick classes when we get there, because I'm going to teach you like everything, right? I realized this today was SPY, but couldn't understand. Yep. So yeah, we call it lower time frame analysis, right? Everything happens for a reason, right? Everything is doing something. If you see these candlesticks on these smaller time frames, guys, it's something else before you get into the trade. So make sure at the class, I don't just teach candlesticks. Like I at first I was doing it, but now I'm breaking down more into detail. Like, why is that candlestick there? So if you took a candlestick course, you're like, man, I already know candlesticks. Come to the classes because it's deeper than what I really think it is. Yep, that's what I did. That's exactly what I did. I highlighted the candlestick. So I did this. I got a box like this. I highlighted the candlestick on the bigger time frame, and then I came to the lower time frame, and I'm looking to see what's happening in that box. That's exactly what I do. Yep, that's exactly what I do. What's the red and orange on the right side? That's volume. So that's volume and stuff like that. We'll get more into that with the strategy. The format of the quiz is going to be multiple choice. Yes, the quiz will be in Discord. What if the primary trend is bullish? If the primary trend is bullish, then you won't see certain candlesticks, if that makes sense. Like if you see, like if you can't get, so you can't get a hammer candle if we're going up on a lower time frame. That wouldn't even be a hammer candle, if that makes sense, right? Because that's not how the candle was formed, right? When the hammer candle comes, you know that we start going down first and then work our way up. So actually, no, let me make sure I got this right. Hold on. I'm having a slow moment right now. I'll show y'all when it's time. But yeah, if we're in a downtrend, right, a hammer candle is going to be in the downtrend on like the 3 minute or the 5 minute time frame. The quiz, yeah, like I said, the quiz is going to be in Discord, guys. You will have it on Monday. I'm struggling a bit with holding when I see a setup on a longer time frame, but panic and jump out when price is going down on a shorter time frame. Every time then it goes against me. How do I end this madness? Am I overthinking or something? Okay, so this is a problem that we all struggle with. I actually was just watching a video about this the other day from a trader that I personally look up to. And one of the things that you have to realize, guys, when it comes to holding trades longer, we all have problems with this, like trying to hold a trade longer. Then when you do, it end up going against you. This happens to me a lot of the times because I am that type of trader where I try to maximize my wins. And this happens a lot, right? It happens a little bit too often. There's not really anything we can really do about that. You know, the kind of point of the game is to, you know, get into a trade, kind of set a stop loss, and just go from there. You know, if you get stopped out, then that's totally fine, right? I got stopped out of Facebook yesterday. I definitely wanted to swing Facebook. Facebook, literally, I would have made $16,000 off of Facebook. Those contracts went from 101, I think, no, they went from like $200. You know, I sold them at $250. That's when I got stopped out. And then today those contracts were $1,100 per contract, right? And it happens, you know. But guys, it's better to do it that way. It's better to just like once you get into profit to set those stop losses, because at the end of the day, if we can't catch the whole move, we just got to live with it, right? We can't catch the whole move. We just got to live with it. I'd rather you guys get into a habit of setting stop losses and profit, because what happens when you don't do that and you try to chase those gains is you more than likely end up giving all those gains back and then end up going red. And we don't want that, right? If we already in profit on the company, we don't want to go red. And as you can see, if you took CVX trade with us, that's exactly what happened. We went up 40-some%. And since we did not set a stop loss, we ended up going red. And that 41% trade ended up being a 90% loss. Right. So instead of us trying to catch those huge gains, we could have just took our money and then, did something else. So that's the unfortunate part about holding trades. That's why when you start being consistent and start making real good money, guys, I want you guys to then you can start taking a little bit more risk where, understand, guys, if you're trying to chase those 100%, 1,000% gains, I'm telling you right now, you have to be okay with going down 30-some%. Right? That's kind of like one of the only ways you're really going to truly see those gains is if you have a wider stop loss, if that makes sense. Why bigger gains require a wider stop loss? If you're a person that's right now in that phase where you're just trying to compound and grow your account, you don't have that luxury of, some certain high percentages trades right away because of that tighter stop loss, which is totally fine, right? Compound your wins. I'm going to show you guys the compound calculator today. I think it's going to change your perspective on how you look at trading and just compounding gains, right? But we're going to get into that. We're going to get into that. I'm going to teach you how to start putting stop losses. And, with trading, you should be like a robot, right? You should kind of be like a robot, right? We get into a trade, we know our entries and exits, we execute, and it's literally it's no argument with the market. We set what we set, and we're going to stay with what we said. It's been so many times where I wanted to move my stop loss because I seen price coming back to my stop loss, and I was just like, man, if I just move it, I won't get stopped out. No, guys, you can't do it this way. If you set a stop loss, if you set a plan, it has to be that, right? If you end up getting stopped out, that's totally fine. I had somebody tell me today, put it in the chat. They said that they put down, they put a hard stop loss and they only lost $2 instead of 100, right? Hey, that's the whole purpose of it, right? We're protecting our capital, especially in this market. Understand trading is a game of probability, guys, right? It's like we don't know what's going to happen, right? The only thing that we can control in this market is how much money we can lose. That's the only thing that we can control. I want people to put this in their notes. The only thing you can control in this market is how much money you're going to lose. So why focus on anything else but that, right? We can't control where the market is supposed to go. We can't do any of that. And that's something that I need to work on. That's one of the reasons why I do like teaching, is because the things that I'm telling you guys, I'll be having to remind myself as well, is because like I can't control the market. So I have to just pretty much go in and make that decision that, okay, I'm gonna put my stop loss here and just do that. That's the only thing I can control, is how much money I'll lose, right? And it just be that, right? I don't argue with myself. And the minute that I break my rules, guys, we pay the price every single time. Like I don't know what it is, but every single time I break my rules. And I now after, taking a nap and coming back to the market, I'm so glad that happens. Like, I'm just so glad. Like, I traded the open. I put in way too much size, especially for OTD. I don't even like, everybody know me, I don't like trading OTD like that no more. So I didn't broke every single rule, and then I ended up being red on the day. And that's simply because, I broke my rules. So it's like, I deserve that. I deserve that every time. I deserve that. And I'm glad, like, I'm actually like looking back at it, I was mad earlier, but I'm actually glad that I lost today because I don't need to get paid for not following my rules, right? I don't need to get paid. So next week when I come into the market, I'm gonna know to follow my rules. For example, we have a Feds meeting next week. One of my rules is don't trade until the Feds do whatever talking they got to do. So guess what? What's gonna happen? Either next week I'm gonna be patient and let the Feds do what they got to do, or I'm going to trade the markets and I'm going to end up losing money. That's literally the decision that I'm faced with. Either you're going to chance it and break your rules and pay the price, or is you just going to wait, be patient, and sit on cash until it's your time. So that's the kind of decisions that I got to make, starting next week, because that's what's going to happen. I'm saying right now, that's going to happen next week. I'm going to come in the market. I'm going to be faced with that decision. Do I want to trade against one of my rules, waiting on the Fed to speak, or do I want to make it, right? But you have to be patient in this game. Patience makes money. May you do an example of that supporting resistance supply demand trend line on one chart? Okay. Yeah, let me do that real quick. So let's just use this one because we already on it. So this is literally how fluent it needs to be, guys. It needs to be so fluent when you're making your support and resistance levels, guys. Like you have to be able to come on the chart. And the first thing that I do is I plot the obvious, right? Focus on the obvious. What is obvious? And it should be like literally easy, right? You should just come in here, plotting the highs and the lows. Just keep practicing. You'll get faster at it. Come in here and make your levels. Okay. So there, I'm done making my levels, right? It should be just like, it should be clockwork, right? So once you have your levels, then that's when I'm looking for supply and demand zones, right? So I'm looking for balance periods and then imbalance periods, right? So when we look here, down, hold on, I didn't mean to draw that right there. When we look here, we had a balance period and a huge imbalance move. So there we go, I can plot that, right? Draw it over here. So if Nike ever comes back into that zone, I know that that's a supply zone. So next, I'm looking for another balance move where price was balanced, and then we had an imbalance. We had another one right here, right? So I'm going to draw that, right? Come again. I start drawing supply zones first, and then I come down. Let's see. We had one here that would have been drawn before that, right? This was a demand zone. Let me color that green. Actually, this wasn't broken yet, so you can pull that over here. Okay, it wasn't broken until here. That's where it was broken. I mean, this don't matter no more because it was broken, but overall, just get good at practicing it. We had another zone down here. That triggered that bounce over there. Let's see. We had an impulsive move, and then we're starting to have this move to the downside. So this one, I'm going to plot that for now. We don't know fully if that's a zone just yet until we get some more downside. But we can see right there, is that a supply zone? And then that's pretty much it. And then as far as that, I'm looking for trend lines. So as you can see, we had this bigger trend line here, right? Sorry, guys, my colors are yellow, so it probably look kind of confusing a little bit, but there you go. I don't know why my colors are yellow today. I literally have no clue. I normally do it, but that's better on the eyes, but I don't know why they're yellow. But overall, that is pretty much it. I look for let's see if we can make a secondary trend perhaps. So let's see if I can find any secondary trends. Right here, we had a secondary trend to the upside, as you can see. Boom, we touched, then we rejected that trend. So keeping that up there. Other than that, I don't see anything else. So then there we go. I'm pretty much done. I'm charted. I already know, should I get into Nike right now? No, I don't see anything else on Nike to make me want to get into it. Right, we rejected that trend line. So right now we're trading on what I call mid-air, right? So let's see, this actually is probably a level right here. We kind of rejected off pretty hard right there. We got more than 3 touches on this particular one. It's a smaller level. So right now we're approaching this level. So right now we're in mid-air. I don't take trades in mid-air. I try to wait for us to at least be at some type of level and then go from there, if that makes sense, right? But keep it simple, guys. Don't try to overcomplicate it, right? You don't have to do all of this. I just do it because I like to see where we're at on the charts overall. Right now, we got 2 different options. So right now, what I'm looking at on Nike. So let's zoom in even deeper. So right now, when we're looking at Nike on a, actually looking at it, right? We're looking to see if we can have 2 things that can happen to Nike, right? We can come down here to this support right here. And then we can come back into this supply zone, this resistance, and create a double top. I make scenarios in my head, right? We can come to this support, bounce, come back up here, create a double top, and then take the trade back down to this trend line, right? We can have something like that. And then we can continue this downtrend. We can come back up, boom, and come back to this demand zone, perhaps. So this is like a scenario we can have, or we can, instead of that, that's what I'm doing. I'm showing y'all like how I kind of like come into charts and just analyze things. So we can have something like that, or we can have, you just have to make scenarios, guys. And then as stuff play out, then you base your trades off of that. Or we can have some type of breakdown into the next support and then have them move up and then break down to that trend line. Or we can just have a clean breakdown to the trend line and break up, right? So there's different ways to look at it, but overall, you just have to kind of just come on the charts and then kind of just see things for yourself, if that makes sense, and just let it play out. But we know right now is now a good time to take a trade on Nike. Can anybody answer that question? Is now a good time to take a trade on Nike? Nope, right? Because we're kind of in the middle of nowhere, right? We're literally in the middle of nowhere. There's not really no room to take it. The problem what I have with a lot of traders is they do stuff like this, which is, to me, it makes no sense. Like they will just take puts to this level right here. So they will take it from right here to right there. To me, the risk reward just doesn't make sense to take that. Like, let me draw my risk reward box. To me, that just, it's kind of just like, why? Like it doesn't really make any difference to me. Does it matter the time frame? No, it don't. I just, for me, I normally just personally like the 1 hour time frame. I feel like it gives the most, to me, the most, if that makes sense, it gives me like just the most opportunity. It looks a lot cleaner to me personally. Some people might say they like the daily more. Some people might say they like the 5-minute more, whatever time frame that works for you. Normally my go-tos are the 15-minute and the hourly time frame. Yes, so that's the real reason why I'm also looking on the 1 hour time frame, is because right now we're, swing trading been kind of hard as far as certain things. A lot of these swing trades be opening up pretty crazy. So I like to look at the 1 hour because that's kind of like my day trading daily, if that makes sense. It's, we looking at the daily as well, but overall, that's kind of like my, if that makes sense, if that's kind of like my, like, I know that trade can work out pretty soon. So I just come down to the 1 hour chart, and then I base a lot of my trades off of that chart. Could that be a secondary trend line underneath? Yeah, it probably could. Let me see if I draw it. So if I grab it from there. Who knows? We have to wait and see when it gets there. Overall, like I don't like to try to just force trend lines. If price ain't reacting off the trend line like right away, then I don't really draw it. Because the problem is you will start having too many trend lines to where then you will start clouding your judgment. And we don't want that. So answer some more questions. Okay. So I did that one already. I'll probably have to do another support and resistance class then. Can you make your screen bigger? I think this is as big as my screen go. You'll probably have to do something on your end. It's actually a wide monitor, so I thought it would be kind of a big screen. Would you say that the methods you use now should work in every type of market? Because you said you changed some things. Yeah, I feel like the methods that I use now, kind of like I kind of made it to where they can now trade in any type of market. The methods that I use now, it kind of made me a lot more patient to like let the setups come from me. At first, it was kind of like going for the setups before they're there to maximize those gains. But like I said, this market, you can't be wrong. Like you can't be wrong that much, right? And the reason why is because in this market right now, when you're wrong, those contracts get killed. So the way I trade now is really patient and just trading at key levels. So that way we can avoid getting chopped up or just losing premiums. So that's why I like the way I trade a little bit now. I'm not saying that I trade my strategy all the way up from once I first started trading, but I have like looked more into certain things and trying to take better quality trades. I think that's what the new strategy or just the tweak that I made to my trading. That's pretty much the only difference that I've made was the way I look at trading, right? The patience that I take when it comes to it. You know, a lot of us feel like we're going to miss a move, so we go ahead and get into that trade early just to see that trade chop you out now, right? Getting into trades early now is not a thing no more. Maybe back then you probably could, right? We probably could. Back then you could. I'm telling you right now. Back then you could. I'm here to tell you. Back then, yes, you could have got into trades early. You could have. And if you went red, you just went red. You know, and it finally came back to you. Now, no. If a trade go red pretty down a little bit too much, most of the time it's not coming back. Like I'm just being honest with you guys. That's why in this market it's so dumb to hold. It's so dumb to hold because most of the time it's not coming back. And if it do, it's not even going to be worth it coming back. And also with this market, you will notice that if you don't take profits at a certain point and you just holding for a bigger move, sometimes the premiums are so messed up to the point where when that bigger move do occur, it don't even be as much as if you would have just took profits there. Also, I noticed another thing in this market is it's better to take profits and then you can get another entry. Like for example, we could literally took profits on CVX and literally it came right back to where we entered at, if not even cheaper, if that makes sense. So that's the little adjustment that I had to make in this market, which I hate it. I definitely hate it. I hate it because I'm going to be honest with you guys. I feel like the market plays a lot of mind games because when I say me, I don't know how y'all feel about it or if it's happening to y'all, but I promise you the trades that I actually like sell for a nice profit or whatever, you know, so I don't want those contracts getting killed. Those trades are the ones that go like 1,000+%. But I promise you, the ones I hold, I promise you, they give all the gains back every single time. Like they give every single game back. Like I don't know what it is. Like it just gives it all back. Like the stock will literally move $10 and it's still only up probably like 20%. But the minute that I sell that same thing, that same exact setup, right? I promise you that be the one that go 1,000+%. It happens every single time. I kid you not, every single time. And there's nothing we really can do about that, right? We just got to keep trading our plan. And over time, guys, if you keep trading your plan, you will catch those big gains that you're looking for. But you have to condition yourself to being able to just take those gains and move on and go from there, right? Those big gains will come, but as long as you stick to your plan, you'll be all right. I don't know if this is a bad question, but how do you go about building a watch list, especially for a smaller account? I'm trying to apply what I've been learning to the market during hours, but I don't know which stocks to look at. I try to follow the ones in the chat just so I can verify that they are seeing what I see, but it can be hard to keep up with the chat at times. All right, this is great. So when it comes to building a watch list, guys, there's two different ways to do it. And this is one of the things that I'm going to teach you, but you can use scanners, or you can have like a already set watch list. And the reason why I like already set watch list is because the thing is, with an already set watch list, you kind of already got you already did all the work. So now you're just focusing on that. And then when it's time to execute, you just execute, right? The problem that a lot of new traders have is they don't feel like they're watching the right things. And this is not how you're supposed to trade, right? Because we probably, like, for example, CrowdStrike was on my watch list, or Cat was on my watch list, right? And that trade ended up going 1,500%. So other people wondering like, hey, Jay, like, how did you know to trade that? I wanted to trade that. So then they try to change up their watch list to go, pick something else that somebody else did. Guys, no, that's not how it works. You want to have a watch list that you already created based off of your account size, based off of your trading style, based off of what you like, and you want to stick to that, right? Yes, you're going to have people that, pick a better play than you or whatever. That's totally fine. But you have to understand, if you built that watch list, when your time is ready, it's going to be ready to pull that trigger. So that's what a lot of new people that they do is they have a watch list set for the weekend or during the weekend. But then when the market open, they forget all about their watch list. Like, they don't even look at their watch list. They in some other stuff that they haven't even charted. Like, they did all their work. Then when they come back and do like a full reflection of what happened with their watch list. They see that their watch list hit. This used to happen to me all the time. For example, let's go look at Facebook, right? Let's go look at Facebook. This is on my watch list. This happened to me. I promise y'all, this happened to me, right? I had Facebook on my watch list. I had it on my watch list. I sent it in the chat, everything. I had Facebook on my watch list, y'all. I'm finna show y'all where I had Facebook. I kept telling people about it. I kept telling Isaac and Sean, I'm like, bro, Facebook about to run. I've been saying this, right? So when we come here and we look at the watch list, hold on, let me delete that. I even said it in the chat, man. I'm so mad that I missed this trade. Okay, so I was looking at Facebook. I had Facebook on my watch list. I seen Facebook right here on this candle. Literally, go look in the chat. I literally posted Facebook is about to break out soon on this, right? I had already had this plan. I knew Facebook was going to break out. I knew it was going to be a nice little run up. When I say y'all, because I'm watch list, I'm trying to look at other people's watch list, seeing what they trade, because I wanted to see like if they found the better stock than I did. I ended up missing this whole, and I missed this. I literally missed, guys, I missed this entire move off of Facebook. It went from 169, I think I seen it really at like 168, right? All the way up to one. I'm so mad, y'all, because I literally caught this to 184, basically. I literally caught this on the money, right? But I missed this whole entire move because I did what a lot of us do, right? I still make mistakes too. I have a watch list, and then sometimes my stock take forever to go. So then I start looking at other people. I'm like, damn, they just caught that huge move on this. And I start, not paying attention to my watch list no more, looking at other people's watch list, right? I missed this whole entire move because of that. I missed the whole thing because of that, because I'm watching everybody else watch list, not paying attention to mine. And so that's what I'm trying to get you guys to do is I want you guys to build a watch list and stick to your watch list, because at the end of the day, we come back and our watch list actually worked, but we were too busy looking at other people's watch list. We ended up missing our own. You know what I mean? So that's what I want you guys to get into. The reason, how did I find Facebook, was because we had this exact same setup on Netflix. This is exactly what I said, guys. I said, okay, Netflix just had a move like this. I'm like, Isaac and Sean, like, bro, look at Facebook. It hasn't even made the move yet. I'm literally telling them, I'm looking at Netflix. I'm like, Netflix and Facebook got the same exact setup. Facebook hasn't made the move. This is going to be the play of the week. I'm literally saying that. But then I'm too busy. But then when it happened, I didn't even see it. I just happened to be like, oh, well, I remember Facebook on my watch list. Let me go look at Facebook. I look at their Facebook. It didn't went up almost $20. Right? Okay, not that high. It is almost $20. Yeah. 168. Let me do the math. Yeah, I'm not gonna have to do math. Facebook moved $16, y'all. 16. I missed a $16 move because I'm looking at somebody else's watch list. $16. I missed and this was clean too. This was a clean $16. right? So that's why I try to tell y'all, when I go to teach y'all how to build a watch list for yourselves, guys, I don't care what you see other people doing, guys. Focus on your watch list. Focus on your watch list. If you have to mute the chat or whatever you got to do that. Focus on your watch list, guys, because that's the problem. You're going to miss a lot of opportunities because of that. Like, for example, I'm telling y'all right now while we're in class, I'm looking at cat. All right. I'm about to show y'all why I'm looking at cat. The reason why I'm looking at cat is because, oh, AMD too. I missed. AMD. I caught part of it, but I couldn't catch the whole thing because I was too busy looking at other people's stuff. AMD did exactly what we wanted it to do. So I'm looking at cat right now. Right. It's pretty much been in this little zone for 3 weeks now. So what I'm looking at is I'm looking at cat to break out of this zone eventually. So we come here. This is on the weekly time frame, and it's been trading in this little zone for 3 weeks on the weekly time frame. So when we come to that daily, we look, that zone is even clear. So as you can see, when we put our support and resistance levels, cat's been having trouble breaking this like this 182 level, right? So then when we come to that lower time frame on like the 15-minute, you probably can see better rejections right here. So as you can see, let's zoom in. Cat's been having trouble. Cat's been having trouble breaking this 182 level. Every time we hit it, boom, rejection, 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 right? So the person that asked me about that 3 touches, this is your time to shine. This is where I'm talking about, right? So we know that once cat breaks that 182 level, is going to run. It has been rejecting this level for 3 weeks now, guys. 3 weeks it's been rejecting this level. So now I'm setting my alerts and I'm going to focus on cat. So when cat break out, we can have a nice run to the upside, right? We can touch some of these major levels because it's going to be a weekly level breakout, right? So cat can pretty much, I got my target up for 192, 193. So now what am I doing now to prepare for my move once it happened is I'm going to be just waiting for it to happen, but I'm also going to be prepared. I know what I'm going to do when it happens. I know exactly what contracts I'm most likely going to get for this type of move. I want to catch that whole weekly breakout. So I'm most likely going to do a debit spread. I'm going to probably do the 180s, the 185 to the 195 debit spread. I'm probably going to buy that one, the 185 and the 195 debit spread. And I'm going to hold that, right? Yep, I already got an alert set. I haven't set it on TradingView, but I already got an alert set on Yahoo Finance. So I'm pretty much just going to wait till it get there. Now, some people might say, Jay, why don't you just jump in early? We think it's going to go there. Well, the market's been kind of all over the place. And to me, I just rather wait for it to break out instead of taking this trade a little too early, just because the market just been kind of all over the place. So there's really no point in me trying to get in early. But like I said, I just set my alerts, wait for the breakout. And if we ever get there, we get there. You know what I mean? So that's literally how I build my watch list. So now I'm not focused on nobody else's watch list but mine, right? I'm waiting for cat. I'm waiting for cat. And this is where patience come in at. I'm waiting for cat. I don't want to blow all my buying power. That'd be the problem. Y'all know that y'all waiting on certain stocks to break or break a key level or whatever. Y'all done used all y'all buying power. So by the time it comes, y'all don't have no money to do it no more. That'd be the problem. Y'all too busy on other people's watch list. When your watch list get ready, you can't even get in because you used all your buying power and now you can't get in. Or you just gotta, guys, you have to start thinking like that, right? You can't, you busy watching everybody else. You can't even, now when it's time for you to execute your trades, you can't do it. So that's what I'm saying. I'm waiting on cat. I know that in this particular trade, if market conditions are right, I want to put, this is a nice trade that I would like to take. I'm going to put about, I know, I kind of like already know how much money I want to put in and everything. I know for this type of setup with this type of move and their debit spreads at that, I know I want to just go ahead and drop about, $10,000 to $15,000 in this trade. So in the back of my mind, while this setup is, I'm waiting for the setup, I'm gonna make sure that I have $10,000 to $15,000 available for whenever it wants to break out, right? Interactive Broker settles your trades quick. I heard about them. They settle your trades quick. So that's a little different, I guess, if you want to do that. But if you know that you got a cash account on Robinhood, Webull, TD Ameritrade, look, guys, don't use all your buying power because your stock can be ready at any moment. You have to be ready to execute. And like I said, we got another Q&A session on Sunday. I'm gonna get to all these questions. I will literally get to all of them. Every single question that you have in this chat, I'm going to get to them. If I can't get to them all today, I'm going to get to them. Every single one. I should start deleting them, but I'm gonna just stop. Like, I'm gonna do a pin. So once I stop doing questions for today, I'm gonna do a pin. And I'm gonna come back. I'm gonna get to all y'all questions. Don't worry. Do you watch the VIX when trading? Okay, this is a great question. We got a class over this. But when it comes to the VIX, guys, the only time that I actually watch the VIX if we're overextended on a move. So let's say that we drop too hard, then I'm gonna come to the VIX. Let's say that we ran up too high, then I'm gonna come to the VIX. The reason why is because most of the time, I mean, you can use it in your trading if you want to, but most of the time, guys, if it's a clean move and it's not none of those crazy aggressive moves or whatever, right? You can kind of gauge it from just your regular stocks and stuff like that. But when it comes to these extended moves, you don't really know when to enter or what it's going to do because it's just like a impulsive move up. So then that's when I come to the VIX and see, like, are we coming to some type of level? Are we coming, like, you know what I'm saying? The VIX kind of gives me that confirmation that I need. So not necessarily every day, but yeah, if we're overextended on a move, yes, I do come to the VIX. Or if I want to time a move a certain way. But we got a class on this. I'm gonna show you guys. On Nike chart, does the breakout create a demand zone? Not really, because there really wasn't a balanced move before Nike broke out, if that makes sense. Like, yeah, we had an impulsive move, but we didn't really come into before that breakout happened, we didn't really balance nowhere. Like, as you can see right here, we dropped and just ran up, right? We didn't really, you know what I'm saying? We didn't really, you know what I'm saying? We didn't create any type of balance or anything. But you could probably put that as a supported resistance level down. Let me see. Yeah, that is a level now. Sometimes you won't see the level until something happens. So right now, that is a level for Nike. Why? We had an aggressive move off that level, and then we broke out. So the lower time frame should agree. Yes, every time. This is key, guys. Every single time. And I know a lot of you guys are, you come from different places. So you probably haven't heard, because I ain't gonna lie, guys, when I came into trading, buying mentorships and stuff like that, nobody actually told me that. Like, nobody actually told me that the lower time frame should be in confluence with the higher time frame before you take that trade. Nobody told me that. They kind of just told me to take the trade based off of what you see or whatever. But now that when we come to timing entries and exits, right, that lower time frame has to be an agreement. And I think really what the problem is, why I'm not saying no mentor is wrong. I think the reason why nobody really stressed that was because the market we were in. Like I said, entries did not matter as much as they did now, right? And I think that's why a lot of people didn't learn that, was because entries did not, like, yeah, they mattered, but like I said, like, you can come back on a trade. You know what I mean? That's where the diamond hand stuff came from. That's where all of that industry, that stuff came from. Diamond hand, like, oh, you cut, you ain't got diamond hands. That came from, because if you hold a trade back then, it'll come back to you. Now, like I said, you can't diamond hand nothing in this. You can't diamond hand nothing in this market. You try to diamond hand something, it's gone. It's gone by the time your hand turned into sand. But yes, the lower time frames, you need to incorporate that in your trading, which I'm gonna teach you guys. What is the difference between a primary and secondary trend? So the primary trend is, so let's delete all of this. So when we look at this chart, guys, don't confuse it. I don't want you guys getting confused. Relax, take a breather real quick. Don't let the wording confuse you. A primary trend is the overall direction of the stock, right? That's all that we're saying. The primary trend is the overall direction. So when you look at this chart, is Nike in a uptrend or a downtrend, guys? I want you to answer this in the Zoom chat. Is this in a downtrend or uptrend? It's a downtrend. Like, you don't have to look at all, you don't have to complicate it, guys. Nike is going down overall, right? So we know that the primary trend is a downtrend, right? Regardless, the only way this will start being an uptrend is when we get into higher lows. I mean, when we get into these right? These lower highs. So right here, we have a lower high, lower high. So the only way Nike will actually be out of this downtrend is if we break this previous lower high. That is when you know the trend is now broken. Did we break this previous lower high, guys? No, right? So Nike is still in an overall downtrend. So that's the primary trend. The primary trend is still a downtrend, right? Don't overcomplicate that wording. Just look at a chart. You see it's going down. That's simple, right? So now the secondary trend is basically what we use to like make short-term opportunities. So we found a secondary trend on Nike, right? That's the one we drew, right? Or is it? No, it's not. It's this one. I forgot my trend that fast. Okay, so the secondary trend is here, right? We had a small uptrend, and now we're continuing the downtrend. I mean, we rejected, we had a small uptrend, right? And we rejected. So that's the secondary trend. So the secondary trend, instead of waiting for this huge downtrend to make trading opportunities, we literally see a secondary trend where we can make some more opportunities. So we don't have to wait for this huge primary trend to make a move, right? We got these secondary trends that we can find trading opportunities off of as well. Okay, so I hope that made sense. When you say you use the VIX when the market is overextended, does that include liquidity grabs, in other words, or liquidity grabs, extended price? Oh, no. So when I say that I'm using the VIX, I just use it basically like, let's say that SPY is just running up like this, right? SPY is just doing a move like this, right? How do we make entries off of a move like this? It's hard to make entries, right? Because sometimes we want to have a trend like this where we're making, this is the type of uptrend that we want, right? Okay, right? This is the type of uptrend that we want to have because we're creating higher highs and higher lows, right? This is the type of uptrend that we want to have. But sometimes we get a uptrend like this where it just sends. So guys, how do we make a trade off of this? If on this one, how do we make a trade off this move? We can't. It's not like, it's really a momentum trade, right? And I understand momentum trading is a thing, but like I said, it's really a momentum trade, guys. It ain't really a way that we can make a quality trade off of that because it's not, it's just an impulsive move. So we're basically hopping in this and just hoping that it continue higher, right? So how do, there's no way to do it. So that when I see stuff like that, then that's when I come to the VIX and kind of see like, okay, we're making this supposed to move up. Is the VIX doing any type of move where I will kind of, what I'm saying? Is the VIX doing something that will give me any indication of where we're going? So normally what happens is when I see something like that, I come down to the VIX and, I see that maybe on the VIX, we're approaching a support level. So that will probably cause me like, okay, I know that this move is probably going to start slowing down because we're approaching a support level on the VIX, right? So that way I don't get caught trying to chase this move, if that makes sense. And we'll get more into it, guys. Don't overcomplicate it. That's all that I'm saying. Is there a reason why swinging OTD sometimes end up worthless and sometimes it pays off big? Yes. So when it comes to OTDE, guys, it's one of those things where it can, especially those OTD swings into Friday, as you notice, they can go up really high and they can also be worthless. And the reason is theta that you're going to learn. If you don't know what theta is, you're going to learn it next week. But the reason for theta, so understand those contracts expired that day. So theta is extremely high. But also what's on your side is gamma, right? Gamma comes into effect at the end of the, by the time the contract getting ready to expire. So gamma helps you out. The gamma will be pretty high. So that's why if a stock moves up a lot on, if the stock moves up a lot on Fridays on those OTDEs, that gamma is kicking in. It's like really causing that stock to really run up. But if, the stock is dropping, you got that gamma, that gamma going against you, got that theta going against you, got all of that going against you. So that's what causes the contract to be worthless. Also understand, guys, trading is all about supply and demand, right? If on Friday, if everybody knows that contract expired, most people are taking profits or not even interested in that contract anymore. So not only you're getting hit by the theta decay, but you're also getting hit by people just generally not wanting that contract anymore, right? Also, sometimes the IV be high on those contracts because people have been trading those contracts all week long. So those contracts have been pretty high. So on Friday, everybody taking profit. So when it comes to OTDE, guys, it's so much against you that will make your contracts worthless, right? You have the theta, you have the overall demand of that contract, and you also have the IV crushes, right? You have if a stock had a high IV, normally it's priced more than what it's actually worth. So then by that Friday, the premiums die, right? So you have so much against you, and that's what causes the contracts to be worthless. So you have to understand that. But now, if it goes crazy, because if you ever notice the Greeks on Friday, that gamma will be like $100, right? Per move, right? Per dollar move, that gamma will be like $100. So that's what knocks out the theta. You know what I mean? And also people think that theta hits, and this is like the biggest thing, the biggest people that people don't know. People think that theta hits like right away, like, oh, when you wake up that morning, it's going to hit. No, theta like hits throughout the day, if that makes sense. So that's why those swings go crazy if you're right, because theta hasn't even had a chance to fully affect, right? So it's been strictly gamma. So that's what makes those contracts go crazy. If price breaks out on a daily, do you take the breakout on a daily or the 15-minute? No, I come down to the lower time frame. If a stock breaks out on the daily, I want to see, why it broke out on a daily time frame. What is the lower time frame telling me that allows me to take that trade, right? I'm not going to, there's some times where I do some crazy stuff and I just take it on a daily just because maybe the market probably moving heavy, very hard in one way. But overall, no, we're not going to make that a habit in this mentorship, guys. If we see it break out on the daily time frame, before it even breaks out, like if you're looking at a stock before it even breaks out, you should already be on that lower time frame getting ready for it to break out. So you should see some type of bullish confirmation on those lower time frames to take that trade, maybe a double bottom, maybe a bull flag, just maybe a support break, maybe a break and retest, anything like that. And then it should be in conjunction with that daily time frame. We get more into that, but that's like what it is. Like you come to that lower time frame and base your trade off of that. What do you think about taking profits no matter what? What at a certain percentage or predetermined amount of contracts? For example, buying 9 contracts, selling 3 as soon as you hit 10. I mean that could be, if you're a person that want to be a profit target trader, that's what we call base hits. That's nothing wrong with that. But for you, your stop losses and your like the way you lose has to be a little different. If you're a trader that's saying like I'm taking profit no matter what, then you need to redo your stop losses in a way to where like you really don't like have much room to lose. Because the thing about having those higher percentage wins is, you can have a wider stop and it gives you a lot of room to make up if you take a loss, right? Versus if you're like a base hit trader that just want 10% here, 20% there, you have to have a way tighter stop loss than somebody that like don't have like an actual profit target. So it's like different ways to do it. So like if I'm a person that say like I want to take 20% here, 20%, 20%, 20%, then my stop loss can't be 20%. You know what I mean? Like that's what people don't understand. Like if you're a person that say, well, I'm only looking for 20%. Well, your stop loss can't be 20%, right? Because you won't be profitable at the end of the day. Like you will make a 20% win here, then you'll lose 20%. Like that don't make sense. You know what I mean? So if you're going to be a profit target trader, which is totally fine. I know a trader like that. His name on Instagram is RW Gates. Really good, really great profit target trader. He only wants 20% on trades. He do not care about none of that other stuff. His stop loss structure is a lot different, right? His stop loss structure is he has a way tighter stop loss to get those 20% gains. And that's okay. That's totally fine. Just, you kind of take it the way you want to take it, but that'd be the problem. People, they say, man, I only want 20%, I'm done. But then their stop loss is 20%. So then at the end of the day, they really ain't make any money And then let's say that they end up going down more than 20%, then they ended up red, right? So that's kind of like the thing. If you're going to have a 20% target, then you need like a 5 to 3% stop loss, if that makes sense, right? Which, like I said, nothing wrong with that. That's totally fine. Yeah, RJ Gate, yeah, that $1,000 account that he just did, whew, that's crazy. Yeah, that's crazy. I've been watching that the whole time. That's crazy. You mentioned you don't chart the lower time frame, as you were saying. No, so what I'm saying is, I think people took that like the wrong way, like, oh, Jay don't chart the lower time frames. No, I'm using the lower time frames for entries, right? So if I have to chart it for an entry, that's different. Now, as far as like managing my trades, then no, I don't like looking at, like, if I'm in like a bigger trade, like if I'm taking entries for like something that's off the 1 hour, like if I like someone on a 1 hour, I'm not going to look at the 3 minute to like watch my trade the entire time. That's what we mean about like not looking at the lower time frames. We're not saying ignore them completely. We're taking entries. We're just not, managing our trades off of that, because you get shooken out a lot looking at those 5 minute time frames, 3 minute time frames if you're in a longer trade. That's what I mean. We still using the lower time frames to take entries though. We just don't want to watch it on the lower time frame. It's a Fed meeting every week? No, not every week. Every month, but not every week. Just remember the rules and foundation you set right now will be the exact same rules and foundation you use later. The only thing that changes is your size of contracts. Yes, it's the only thing that changes. Like, as you grow in trading, guys, the only thing that changes is your contracts, right? You just size up when you become more confident. If you are waiting for a candle to close above or below a level EMA, it just barely closed above by the hair, do you consider that valid, or you will wait for another candle? I guess that now that is one of the hardest things to time. Because sometimes we have like a barely close above or something. In that situation, what I normally do is, that's why I trade with the indexes up. So like QQQ and SPY, I trade with those up, because sometimes you will have a stock that might close above, but then on the indexes, we're still showing like a certain direction. So that helps me hold longer. And like I said, we'll get more into that strategy wise. It all just depends on the market conditions. But I'm gonna show y'all what I do in those situations, right? That's why that's what I'm saying. It's hard to trade from your phone, guys, because you be wanting to look at those indexes to make sure that what you're doing, it's the stock is still going your way, because we have a lot of little fake outs, right? So that, to answer that question, there's no real way to answer that right now. I'll just have to show you when we get more into strategy based about that's where using indexes and stuff come in at, to decide like what you're supposed to do in that situation. Because sometimes you will have a little bitty close above, and then it'll continue to go back down, but you probably a cut because you've seen the close above a little bit, just to see it go down another 100 points. You started charting Nike on the 1 hour. Do we not need to draw levels on it? Like I said, you can draw levels, guys. The levels that you draw on the daily time frame are going to be the same levels on the 1 hour, right? You're just going to get probably a little bitty more. You know what I mean? Like the same level. So I don't want people overcomplicating that, if that makes sense. Like the same levels that you see here are going to be the same levels on the lower time frames, right? So what you're going to do is, it don't really matter exactly which one you start from. A lot of traders just go from the 1 hour and just call it that, because they're day traders. But you can start from whatever time frame you want to start from. The bigger time frames are always helpful. But if you just want to be like, okay, I'm gonna just go from the smaller time frame, that's totally fine, right? Because like I said, the way I trade, I plot key levels in the first place, where turning points. Like if I just came to this 1 hour and just did 3 touches everywhere, then that would probably be like, okay, I probably will mess up. I probably will have too many levels. But if you just focus more on the turning points, then you don't really have to focus on just going to that daily time frame, right? Because these levels are going to be the same exact levels on the daily time frame, if that makes sense. Like let me draw it real quick to show you what I mean, right? These levels are still going to be pretty accurate on that bigger time frame. So let's go here real quick. Right? See, look, it's the same levels, right? You just get a little more when you do the turning points. It's the same levels. Don't overcomplicate that. My issue is trusting for price action to hit levels. There might not be an answer for this. What's technically happening when your PS doesn't meet your support resistance levels? If it doesn't hit your support resistance levels, guys, you know, that's kind of fine. The market kind of moved the way it wants to move. What I have to say about that is, you know, we don't know if the stock is going to hit our levels all the time. So that's why trailing stops and just like setting a stop loss, you know, just trying to chase it to your levels. That's normally how we go about that, if that makes sense, right? Um, that's literally like the only like thing I can't really word that any other way. It's just like, you know, now, if your level is not hitting at all sometimes, that means it's probably something wrong with your levels. You're probably doing it wrong. You're probably not plotting the level the right way or something like that. But if it just missed it by like a couple of cents or a couple of dollars, depending on the stock, that's totally fine. It happens. You know what I mean? But like if you're missing it every single time, like I mean, yeah, like you have to probably go in and do your levels over because you're probably doing something wrong. Like Facebook actually missed like my second target by like $1 maybe. So, you know, it's all good. Can you look at Apple, I'll do trail lines, etc. I'm curious to see if you see what I see. Okay, hold on. Hold on, guys. My computer about to die. Okay, so the next question is reading tape relevant with this strategy? Should we learn that? So for me, reading tape, honestly, like for my strategy, the way I do things, I don't really need tape. Tape is totally fine in a way if you want to learn it. Nothing is wrong with, you know, knowing everything about the market. But for me, I'm not really a momentum trader. So for me, I don't really need tape as far as that goes. Like the candlesticks, if you understand why candlestick is there, that's why I said like candlestick analysis. If you understand, you know, why that candlestick is there, then tape will kind of be, you know, a little bit just extra for you, or probably clouding your judgment a little more, because with tape, they have a lot of things that come with tape. Like they have like a lot of how do I put this? Like a lot of fake outs. They put extra stuff on there. Like you get a lot of like just it just be too much noise. And when the way my strategy is set up is to where I try to eliminate the most noise as possible to keep a clean, you know, a clear head, right? So, like I said, if you want to incorporate tape, that's totally fine. You're not wrong. But for me, I just like to keep things simple, and just having all of that noise is just, to me, it just don't make any sense. And I've been really profitable without tape. Actually, when I started using tape, I actually started losing more money. So for me, it just didn't make sense, right? And then I started meeting other traders that, you know, are similar to what I do, and just hearing them like, oh yeah, I don't use tape, right? And that's when I kind of knew like, okay, well, I guess that's not something that I really needed to know. Like if you know it, that's totally fine, but that's not something that I needed. You know what I mean? Had to stress on too much. But like, yeah, if you're about to be like a for sure, like if you know for a fact that you're about to be like a momentum kind of trader, then yeah, tape for you is definitely your thing. Okay, let me ask you some more questions, guys. We're gonna do more of these. Actually, do y'all like these? Do y'all prefer doing more of these? Do y'all think that they help? Let me know. I'll do more of these then. These aren't bad at all. Answer you guys' questions. And then what I'm gonna do is I know the the other mods, they want to do more of these as well. They like answering questions. So what we'll probably do is I'm gonna talk to them tonight and see if we all can like work on the schedule to where we're all helping actually you answering questions in a way. So somebody asked me to draw the trail line for Apple, see if we seeing the same thing. So first of all, Apple broke out of this huge trail line, right? Let's go from the daily time frame, right? Apple broke out of this huge trend line. So when we go to Apple, we broke out of this huge trend line on Apple. No, it's different right there, right? So that's why Apple pretty much ran up so hard. It was because we broke out, right? Once we broke out, we pretty much just ran and we touched our first level, which would be this first rejection point, right? This aggressive move rejection, aggressive. You see how these levels, like I said, these pivot points, guys, this is what I'm saying. Learn support resistance the way that I'm doing it, because it'd be kind of automatic, right? Like that was our first pivot point here, pretty much. And then that was a aggressive level prior, and Apple went straight to it, hit it on the money. You know what I mean? So that's why I like telling you guys the way I try to draw my support and resistance levels. It keeps it kind of simple, right? It rejected there. So we applied in that point, our actual turning point. That's all my support and resistance is. I don't want you guys confusing support and resistance, guys. All I'm looking for are turning points. At what point did price hit a level or hit a certain area on the chart and it made a turn? Like it made like a literally a 360 flip, right? That is all my support and resistance at, right? When it hit here, it sold off, it hit here, it literally made a huge turning point, came right back up, right? Came back here, used that same level that it made a turning point here, and made another turning point here and rejected. Keep support and resistance simple, guys. Don't make it hard on yourselves. Keep it simple. So Apple broke out of this. So we got our daily. Oh wow, hold on. All right, let's see if you guys get this right. All right, is Apple in a downtrend now, guys? When we're looking at this chart, no, right? Apple is no longer in a daily downtrend. This is the first time since we've had this huge sell-off from when they hit a $3 trillion company that we finally broke a lower high. We finally broke a lower high on Apple. So Apple is no longer in a daily downtrend, right? Why? I want you guys to see that. So that probably just confusing people, guys. Look, this is our first lower high. This is our lower high right here in this downtrend. We had a lower high. Lower highs are when we come back up. So let me draw it. Let me draw an example real quick. I want you guys to see this. So when it comes to a downtrend is consists of lower highs, lower lows, lower highs, lower lows. So when we come to this downtrend, we have a lower low, lower high, lower low, lower high, lower low, lower high, right? So for the downtrend to now be broken, we will have price refusing to make a lower low, and then this lower high will have to be broken now. It broke that lower high. Now, do we take a trade? So now that Apple took a now that they broke that lower high, guys, do we just take the trade now? Like, do we say, oh man, we about to run up? Do we take the trade now? Like, do we just take it? No, what are we waiting on? What are we waiting on for Apple? A retest, right? What is a retest normally called? A higher low, right? Correct. So this is the next move. Apple finally broke that lower high. So now what we want to do is we want to see price come back and retest that. What normally happens is that lower high right here, this right here, price normally breaks above and come back and retest that level right there, and then it becomes a higher low, right? So let me delete this real quick. So this is pretty much the structure that Apple is in. Actually, let's do the whole structure. Hold on. All right, so we started that downtrend, creating lower, higher highs and higher lows. Then we created this double bottom, basically, right? Now Apple broke. This is that lower low, right? So lower high. Apple broke this lower high right here, right? So now we're looking for Apple to take calls, right? We want to take calls at higher lows. Let go of this thing. TradingView is annoying. So now we're looking for Apple to, we're going to call this our support level now, right? Why? That's already our level anyway. So we're going to plot that right here. So now what we're looking for is Apple to come back and retest this level to confirm the full on uptrend. So we're not saying, let me make this clear. We are not saying that Apple is in a uptrend just yet. We're just saying that it's not in a downtrend anymore. We won't know if it's in an uptrend until it come back and retest and make a higher low. And that will be our buying opportunity, right? I want you guys to start looking at trading that way. Right now, Apple is just sending. So now what we're going to do is we want to wait for a retest of that previous lower high before we take calls, because we want to buy at higher lows. Now, that's why I said, that's why we don't just buy calls, because this can indeed be a liquidity grab. This could be. This could be a liquidity grab. Apple can actually come back down, but we won't know that until we create that. We look at and see it that support. We don't know. So we don't know if this is a liquidity grab or not, because we have to create a higher low or anything. We have to wait. So we don't know. So that's why we're patient. That's all it is. We're being patient, right? So right now, Apple has earnings coming up. So we don't know what is about to happen. So it probably can keep running up and going higher. But overall, we're not getting into this trade until we create a higher low. You buy calls at higher lows, you sell puts at lower highs, right? That keeps your life simple, right? Let me show y'all, for the people that don't understand the trend just yet. We have a class on this. That's totally fine. I'll make another class if we have to. Okay, so I'm about to put it this way. The red is going to be where you run puts, right? These reds are puts. These are what we call, what are these called that I'm putting these red rectangles at? What are these called? Lower highs, right? So now the green, are going to be what? Higher lows, right? So these are your entries for calls. That's why I said, how many people have actually took a trade where they bought in and seen the stock pull back, they cut for a loss just to see it go higher? How many people have did that? I'm gonna bring this up every time we do it, right? If you ever did that, that's because you didn't buy at the right points. You didn't buy at higher lows, right? You didn't buy at the right time. Now, when we get into lower time frame analysis, guys, what should be happening is, do we just fully just take calls right off of, the daily time frame? No. We see that Apple come down and retest. It's at a it's normally at a I'm about to really touch it. I'm really finna get y'all right here. I'm finna give y'all some game, right? Okay. So if we have Apple come touch a higher low on the daily time frame, we don't just take calls from that daily time frame. What's going to happen is that lower time frame is going to be this move right here. I'm about to really get y'all with this one. This move right here. Can anybody tell me what they think this move right here is going to be on a lower time frame? So right now, this is the higher low, right? This is a higher low on a daily time frame. So before it gets to the higher low, what is that lower time frame going to be in? I'm saying, what is it going to be in? Is it going to be an uptrend or a downtrend? Downtrend, right? So before you just go and say, oh, Apple is at a support level, let me take calls. No, you don't do that, because most likely the 15-minute or the hourly is in a downtrend. So what's going to happen is, this move right here, this is how you take a daily higher low, right? About to really help y'all out right here. So you're going to have a downtrend, right? On a lower time frame. So this area right here is that support. That's that daily higher low that you're waiting to take entries on. So then your entry is going to be here, right? That lower time frame is going to give you the entry right here. This is where you're taking your entry. And that's going to be the start of that daily time frame reversing to go up. Y'all get what I'm saying? So you don't just solely just take it right away, because you could probably take it too early on a lower time frame. Like, you probably take, if you see this right here, most likely if you just take it and you go red, most likely on the lower time frame, you took it at a lower high. Y'all get what I'm saying? Is that making sense, guys? You took it at a lower high on the lower time frame, even though on the daily time frame it's at a higher low. So then, to time that perfectly, you're waiting for the lower time frame breakout, which will start and trigger that higher low bounce on the daily time frame. I hope this is making sense now. Lower time frame analysis is a must, right? This all about trading is all about timing, guys. This is a must. And I'm gonna get more into this when we get into strategy, but this is a must. You don't just take trades based off the daily time frame. You come down to that lower time frame analysis. I want you to put this in your notes. Lower time frame analysis, right? It has to be in conjunction with your higher time frame, right? And that's what I'm trying to get y'all to go into. Can we see an example? Man, I hate now when it comes to this, I hate that. Let's see. I can't even think of an example off the top of my head right now. I'm gonna have to show y'all the example when I'm gonna look over the weekend and try to find the example. Let's see if A or B had an example. Let's see. I ain't gonna lie to y'all. I'm gonna look over this weekend. I'm gonna do y'all a good one. I'm gonna look over the weekend and show y'all a prime example of this. Okay. Remind me to it. Remind me to do it, guys. Be like, Jay, you said you're gonna show us an example because I can't think off the top of my head right now. Alora. Actually, let's see. Okay. Let's see something real quick. Let's just try to do like a lower time frame analysis real quick. Okay. So right here, we have a, let's see. Let's say that we have this double bottom right here. Okay. So this is the daily time frame, this double bottom, right? Hold on. Actually, let's do this. So we had a double bottom. We thinking, damn, move. Trading view is annoying. Okay. So we had this hammer candle right here at this double bottom, right? So let's go to see on the lower time frames, what was the lower time frame telling us before to time this entry, right? So we're focusing on, y'all see this. Let me zoom in for people that be like, I can't see. Let me zoom in. I'll zoom in for you. This is the candle that we're talking about, right? We're looking at this double bottom right now, SPX. Everybody see that? This double bottom. Everybody see that, right? Making sure before I move on. Everybody see the double bottom? Okay. So let's see if we can find any type of confirmation on a lower time frame that gave us to time this entry on SPX, right? So let's go look. So it's kind of, I normally kind of like the 1 hour. What do we have? Can anybody tell me what we have already that y'all noticed that what happened? What do we have? Before I even draw it, what do we have? Nah, oh, we got a tweezer bottom. I didn't even see that. But overall, like, look at the bigger picture, guys. What do we have? We have a gap, but hold on. Y'all don't see it. Trend break. There we go. Right? Look at that. We were in a downtrend. We remember what I said earlier. I said the hammer candles be what? What did I say? The hammer candles are normally what? A downtrend, and then it has a breakout. So you could have timed this entry on the breakout here, right? And then you had a tweezer bottom at the lower time frame or whatever. But overall, that gave us that confirmation to then take the trade to the upside because we finally had a trend line break, right? Did that make sense? Cool. So we had a trend line break. I'm gonna do more of these. I wanted a better looking one. I mean, overall, this is still a decent one. There was a downtrend break. It was pretty clean. XPX, you can't really, it's be hard to catch those moves sometimes because it be gapping like this. But I'm gonna show y'all more examples overall. But I just wanted to show y'all that like we had a downtrend. So normally this, somebody asked why I don't use the 15-minute. We can go to the 15-minute. We probably still have something else as well. So the 15-minute just gave us a lot stronger downtrend. Could have used any one. Normally on a daily time frame, sometimes I just come down to sometimes on a daily time frame, I come down to the hourly first. And then if I wanted to use the 15-minute, I come down. But it's going to be the same thing, right? Don't overcomplicate it. You can use any time frame, right? If we really want to come down to it, let's see what's on this. Also, we had what? Before we broke out, what do we have on this lower time frame, guys? What do we have right here before we broke that trend line? Consolidation, right? We had consolidation, take the break above the consolidation, right? So they're going to show you like using that lower time frame, but all of this was pretty much that one candle before you took entries, right? There you go. That was pretty much these candles right here. And that's what times your entry on a daily time frame to take the breakout and ride this move up, because you came to the lower time frame, you did your lower time frame analysis, and there you go. We had that downtrend. Now, do y'all see? Is it a lot clearer now, especially on like the 10-minute? Is this a lot clearer now? Look at that. Y'all see that? Is that a lot clearer trend line? Actually, let's go. Let's do you even a bigger one. Let's do you even bigger one. Let's say, like, it don't matter what time frame you come down to. It don't matter. Let's just do you an even better one. What do we have right here? What is this pattern? What is this pattern right here? Not ascending. Ascending at a flat top. We got a symmetrical triangle or a bull pinning, right? It could be either one. And what happened? So think about that. You see a hammer candle, or we at that double bottom formation on that lower time, on that higher time frame, right? Just to like let you know this, right? We have this hammer candle, this pin bar starting to form or whatever on that bigger time frame. So now we're just looking for an entry, so that way we don't get messed up, right? So then when we come to these lower time frames to time that entry, as you notice, you have to understand, guys, all of this price action is those last two candles, right? So the problem is, you have to understand, guys, the problem is this right here, you could have got in too early on a smaller time frame. Even though, like, let's plot this whole, I want to plot this whole thing. So these are the two candles that we're looking at. These are two candles right here, right? These are two candles. This is a candle, this is a candle, right? These are these two candles on this daily time frame. Let's go look at it, right? These two candles right here. So how do we time an entry? So let's say that you went ahead and just said, oh man, I see this, we about to make a double bottom, we about to bounce. This is why you went red on this trade, right? Because you had a lower time frame downtrend that we haven't broken yet. So you could have entered here and then took a loss just to see it come back and then break. That's because you didn't use lower time frame analysis. Is it making sense now? Let me know. Is this making sense now? These is the same candles we were just looking at. The reason why your entry was bad was because you never came to the lower time frame to figure out what's really going on inside that candle, right? This is the whole time. Yes, it's a double bottom, but at the same time, it's still in a downtrend. So we have to wait for it to break before we can take entries. So and I'm telling you, we're going to get more into this. Like I said, I know a lot of people probably did not teach you lower time frame analysis. Like I said, the market didn't have to really worry about this too much back then, but this is important, right? That lower time frame definitely helps. Like it didn't matter what time frame I went on. I could have looked at the 1 hour, we in the downtrend. I could have looked at the 15-minute, we in the downtrend. I could even look at the 5-minute. It's good. The same thing. It's the same thing. It does not matter. If I really wanted to, come to the 3-minute. I don't really go any lower than that. Same thing, still in the downtrend, whatever one you want to do. Now, if you wanted to, for a stock like SPX, since it be gapping up like this, if you've seen this and you look like we were holding support, making a little double bottom, and now we created a bull pennant under that, we know SPX, this was more towards close. So what could have happened is you could have just took entry in this pennant like before close and then just swung it. That is a strategy. If you see a lower time frame, look like it's about to break out, everything lining up, it's at support, it's creating a hammer candle on the daily, and we haven't quite broke out yet, then I will get in. This is where we come into like swing trading, get into that, and then I will take my entries and just swing it. And then as you can see, I would have caught a nice little 100-point move on SPX. Yeah, that's why I said on this particular stock, you probably would you would have probably missed this particular stock because it didn't break out. It didn't break out until pre-market, if that makes sense. So like I said, in this situation, you would have just assessed your risk. And now this one will upload faster because I'm at home. The other videos I wasn't at home and they Wi-Fi kind of suck. I'm at home. We got that premium Wi-Fi here. It's gonna upload tonight. But yeah, so we're here. I would have swung this, right? I would have swung calls and then had that morning play or whatever. Or as on that pullback, we could have bought that pullback, whatever. It's different ways to do it. We're getting more into that. But there we go. So I'm hoping that making sense when it comes to entries. Why does XPX gap up and gap down crazy? I mean, XPX just do that. Like it just be XPX likes to move a lot when the market is pretty much closed or whatever. It just gaps. Like it's crazy. It just be gapping up and down. That's why it's kind of like I don't really know how to explain that. It just do it. And it just do it. I don't know how to explain that. I've seen XPX and ES, yes. I've seen a hammer not do what it's supposed to do a few times. Right. If you've seen the hammer do what it's not supposed to do, that's because on the lower time frame, it didn't break out. Right. So if XPX, like let's say that, you've seen that hammer forming on a daily time frame and it didn't, and then it just turned into something else. That's because it got rejected from this breakout and came back down. Right. That's why the hammer candle didn't work. It got rejected on the lower time frames. This week I'm a better teacher than trader because I started the week off really good, and then that discipline. I swear if you could take discipline out of trading, I promise you we'll all be rich. Would it be possible if it continues sideways? Would it be possible if it continues sideways or went bearish the next day? I mean, yeah, anything like price, we don't never know what price will do. You know what I mean? Like we don't never know, what can happen once it happens. Like we get on the charts and we just trade what we see, right? We seen a double bottom on a possible double bottom on a daily time frame, right? We seen a hammer candle. I mean, we just take the trade, you know what I mean? Like it might work, it might not. You know what I'm saying? Like you just go in there with the right risk or whatever, and you just take the trade. In this instinct, you would have won on this trade. You would have won pretty nicely on this trade. And then it presented another opportunity in the morning because it gave you a pullback in the morning as well, pullback into that support, and then we ended up bouncing. You know what I mean? So it's different ways to do it. And once I teach you guys this indicator right here, you would have noticed that this was a serious area of significance because this was a high volume area. And this is where we get into like, look how I'm giving y'all too much game right now because we got classes over this and it's gonna make the other classes boring because I'm telling y'all too much right now. But as you can see, when we using this volume profile indicator right here, our volume, as you can see at this price area, that we had higher volume than normal here. So what did price do? Price automatically bounced off that level immediately. Look at that. Came, bounced immediately, came back and retested that level and bounced immediately off that level, right? High volume area. But yeah, I'm giving y'all too much game right now, y'all. We gonna we gonna have to end the mentorship early if I keep giving y'all everything too early. Yes. Oh, these gaps are because this you don't have a pre-market on XPX. My bad. That's probably I didn't know the way you were asking that question. No. Yeah, we don't have a pre-market for XPX. That's why the gaps are like this. There's no pre-market. XPX is great if you like gap fills, and that's one of the strategies that we're going to get into. XPX is a great stock for gap fills. If you want to trade gap fills, that's a high probability trading strategy is trading gap fills. XPX is the best stock for that. A trader that I know that do that, her name is Macy Trades. She literally only really mainly trade gap fills on XPX, and she makes thousands of dollars doing so. Thousands, guys. She makes thousands doing that. She does that every day. So like right here, we got a gap right here on XPX. And as you can see, we pretty much filled that gap throughout the day. So you could have woke up that morning. Literally what she do is she find gaps on XPX. And then before that gap starts, she just set a trigger level. And then once it breaks there, she just take calls. She do that every day. So great trader if you like doing gap fills. I'm going to teach you how to do gap fills. I do gap fills as well. XPX is like the money for stuff like that. We had another one here. Like when I say this is like one of the easiest strategies ever, is gap fills, right? So right here, we had a gap fill on XPX. You literally setting a target for that point where the gap ended, right? We're setting for a trigger. And then once it breaks above that gap, we're taking calls, and there you go. That simple. Like that's one of the, and we're riding up to that gap fill. And she does that all the time. It's very profitable. Like here, we had another one. If you didn't know, we had another one. I'm just showing y'all stuff right now. We had another one right here. Literally set a trigger level for that level right there. As soon as it break, take the gap fill. And I mean, XPX, you can do this all day long. You can make a living off of doing this, right? Just trading XPX gap fills, literally. You can make a whole lifetime income off of just doing that. Let me see. But yep. So make sure that you guys, believe it or not, I'm at the movies. Bro, in the movies with it. But all right, guys, I'm actually going to, yes, this is recorded, right? Yeah, this is recorded. I know that I have to get to some more questions. We've been on here for about 2 hours now. I'm going to get to all you guys' questions. I'm gonna do more of these. I didn't know that you guys wanted to like these Q&A sessions. So I'm going to do more of these. I know that y'all have a lot of questions. I'm going to get to them. I'm going to get to them a lot. I'm going to get to them. We're going to do another one on Sunday. So just save these questions. If you come up with any ones over the weekend, just go ahead and drop them in that Q&A session tab. And I promise you I'm going to get to all of them. Some of them, if I can, I'll just look at them. If they're real simple to explain, I'm going to just go ahead and reply to you that way. But overall, guys, I'm going to get to your questions. Don't worry. I will get to all of them this week. So don't worry about it. Macy Trades, what's the name of a trader you say you watch and they help you learn how to maximize your trade lines? So one of the traders that I looked at that helped me maximize my trade lines, his name is Yusmar, however you say it. Forgot how you say his name, but he's a trader that uses trade lines a lot. And he looking at sometimes when he do it a little bit, that kind of helped me in the beginning. I'm not sure if he still got the videos up. I'm gonna go look, but that was something that I looked at. Another trader that I like, his name is Matt. What is it? Matt, he's a futures trader. Let me see. What is his name? Matt something. Matt. I think it's like on YouTube. He go live every morning on YouTube, guys. So let me see. Matt something. Oh, Matt Day Trader on YouTube. It's called Matt, M-A-T-T Day Trader on YouTube. Pretty great trader. He's a futures trader though, but overall, trading charts is the same thing. I look at a lot of Forex as well. That's kind of where Forex traders are. If you notice, I don't think y'all noticed that, but my style is kind of the way I trade and the way I do charts are kind of like similar to like a Forex kind of trader. And the reason why is I feel like Forex traders focus a lot more on the actual charts. And I think like when it comes to stock traders, like, yeah, they focus on charts, but I don't think their technical analysis is as good as Forex traders. So that's why where these trade lines and stuff come in at. The reason why is Forex traders, cryptocurrencies and Forex pairs, they move a lot faster than stocks. So for them, entries and exits really matter. So when we apply that to the stock market, we get better entries for ourselves. You know what I mean? So that's kind of one of the things, like if you look at a Forex trader chart, they're pretty much similar to kind of how what I've been teaching you guys. With stock traders, I see a lot of the same stuff. You know what I mean? Like stock traders, they kind of do the same kind of things in a way. Like everybody draws just a symmetrical triangle for everything in stocks. And then when they don't go their way, they kind of get upset, right? They don't actually like look at the overall structure of the market a lot of the times. Not coming from any stock trader. I'm just saying a lot of stock traders are normally fundamental, but technical analysis tell you a story before that news even come out. Actually, do y'all remember yesterday? I just want to show y'all how literally charts apply. Do anybody that was in the chat yesterday remember how I was in Facebook puts because of the downtrend? We refused to break a higher high. I don't know if y'all was in the chat when I was talking about that, but I was like, people was like, why are you in Facebook puts? I'm like, because we refuse to break a higher high, like we're double topping coming down. And then Snap missed earnings, and then we tanked. right? So in a way, you know, I'm gonna have to say, well, Jay, that just happened because of Snap. In a way, I mean, if we're trading technical analysis, the charts kind of already told us that Snap was going to miss earnings from Facebook. I don't know if that kind of made sense to y'all, but I was already bearish. I was literally in Facebook puts. I had just got stopped out, but I was already bearish on Facebook. So for them to, you know, drop from Snap earnings, that just told me that the charts told me a story before the news. So that's why I try to get people like to really like tap into technical analysis, because they tell a story way before the news can tell you anything. Yeah, I ain't gonna lie. Okay, yeah. Everybody that don't know Gary, he had a child, so he's been really focusing on his child right now. He took a little break from trading because, you know, he just had a baby. But yeah, Gary used to always say that, like, bro, you can predict earnings off the charts. Not every time, but sometimes, you know, some of this stuff be kind of like the charts be telling us way before the news is even released. So that's one thing that Gary stressed on. And y'all will get to meet him. He will be back, but he definitely took a break from trading to focus on his personal life. So me personally, would I have did that? Probably not. My child would probably be in the chair with me while I'm trading, but you know, it's all good. We understand. But all right, guys, I'm going to let y'all go for the weekend. You know, we just came off of a tough ending to the week. So what I want you guys to do is take a break if you can. You know, if you got that free time to go ahead and, you know, get on the chart, see what you can see, you know, start building your watch list. How I normally do for the weekend on Fridays, I look at something like, for example, today, I looked at cat. So then on Saturday, I'm gonna come back to the charts just a little briefly, not nothing crazy. I'm gonna look and see if I see anything on cat that I missed previously. You know what I mean? Like I look at the charts I look at my watch list 3 times a weekend. That way I get to see things that I might not have caught in the first place. And you know, over time, like this has helped me so many times building a watch list. So I got Boeing on my watch list. I have Cat, CrowdStrike, and Tesla. Those are my stocks that are on my watch list so far for this upcoming week. So I will look at those stocks 3 times over the weekend, look at the charts 3 times, and I will start noticing things that I didn't see before, right? And, you know, real briefly, without doing too much, right? Don't do too much. You know, take your break, enjoy your weekend, and go from there. Thoughts on trading recap as far as what we should do? Thoughts on trading recap as far as what we should do? Are you asking, can we do a trading recap? Is that what you're asking? Yeah, I hope that made sense. But we get into it. If you're asking for a trading recap, I normally do trading recaps. Like I said, Sunday I'm gonna try to get some in. I feel like the best way to learn is to learn what not to do versus what to do. That's kind of how I learned what not to do. But all right, y'all. How should we approach ours pretty much? Okay, yeah, I can do something like that. Let's shoot for Sunday, guys, where we come on here and I'm gonna send y'all kind of what I do tonight so that way y'all can have it. But yeah, let's just go for Sunday, kind of like building a watch list. And I'm gonna send y'all like kind of like text y'all what y'all should do to over the weekend to build a watch list. But we do have a class on that as well. So but all right, guys, this video will be uploaded in about the next hour or so, and y'all can have it. So, all right.